Jai Hind everyone. Welcome to my YouTube channel, which is Explore Yourself, Banking and General Knowledge, etc. Today I will discuss about group discussion topic related to the internal promotion examinations for bank employees. Welcome to part 18 of my Path to the Corner Office 2025-2026 series, where I break down real bank promotion exam questions and give you clear, practical sample answers about group discussion to help you climb the career ladder faster. This group discussion topic: Green banking and sustainability initiatives in the banking sector. Introduction. Green banking refers to banking practices that promote environmentally responsible and sustainable economic growth by reducing the bank's own carbon footprint and encouraging eco-friendly activities through financial products and policies. In the era of climate change, resource depletion, and regulatory pressure, sustainability has moved from being a good to have concept to a core banking strategy. For banks, green banking is not only about environmental protection but also about long term risk management, reputation, and profitability. Need for green banking. The need for green banking arises due to multiple economic, environmental, and regulatory factors. Climate change risks, extreme weather events increase credit risk, operational risk, and asset quality issues. Regulatory pressure, central banks and regulators, RBI, Basel norms, SEBI, global climate framework, increasingly stress ESG compliance. Resource scarcity, efficient use of energy, paper, and water reduces costs. Stakeholder expectations, customers, investors, and governments prefer environmentally responsible institutions. Financial stability, green finance reduces long-term systemic risks by supporting sustainable industries. Thus, green banking aligns financial growth with environmental and social responsibility. More components of green banking. Internal green operations. Banks reduce their environmental footprint through paperless banking and digital documentation, e-statements and online KYC, energy efficient buildings and LED lighting, solar power installations in branches, green data centers, waste reduction and recycling. These measures improve efficiency while lowering operating costs. Green financial products. Banks promote sustainability through targeted products such as green home loans for energy efficient houses, loans for renewable energy, solar, wind, biogas, electric vehicle financing, sustainable agricultural loans, green bonds and climate bonds, carbon credit financing. These products encourage eco-friendly investments and open new revenue streams. Green credit policy. Banks integrate environmental risks into credit appraisals, environmental impact assessment before sanctioning large projects, avoidance or restricted financing to polluting industries, preference to ESG compliant borrowers, monitoring post-sanction environmental compliance. This reduces future NPS and reputational risks. Sustainability initiatives in banking. Environmental sustainability, financing renewable energy projects, supporting waste management and water conservation projects, promoting climate resilient infrastructure, funding green startups and MSMEs. Social sustainability, financial inclusion through PMJDY and DBT, credit to priority sectors like agriculture, MSMEs and women entrepreneurs, support to education, healthcare and rural development, ethical lending practices, governance sustainability, ESG framework, transparent disclosures, ethical business practices, strong risk management systems, board level ESG committees. ESG integration ensures long-term stability and investor confidence. RBI in government. The Reserve Bank of India plays a crucial role in promoting green banking. Guidelines on climate risks and stress testing, encouraging banks to disclose climate-related financial risks. Priority sector lending, support to renewable energy, integration of sustainability into risk management frameworks. Government initiatives like National Action Plan on Climate Change, Electric Mobility Mission, and Green Hydrogen Policy further strengthen green finance. Green banking practices. Internationally, green banking is guided by Paris Climate Agreement, Unsustainable Development Goals, stages, Equator Principles, Task Force on Climate-Related Financial Disclosures (TCFD). Global banks increasingly align lending policies with climate commitments. Opportunities for banks. Green banking offers multiple opportunities, new business avenues, green bonds, ESG funds, sustainable loans. Risk mitigation, lower long-term credit and operational risk, cost reduction, energy efficiency and digitalization, brand value, improved public trust and global recognition, investor attraction. ESG-focused investors prefer sustainable banks. Thus, sustainability supports both growth and resilience. Challenges in green banking. Despite its benefits, green banking faces several challenges. Lack of standard definitions. What qualifies as green is often unclear. High initial cost. Green technologies require large investments. Limited awareness. Customers and staff lack our knowledge. Data gaps. Difficulty in measuring climate risk. Regulatory uncertainty. Evolving frameworks create compliance challenges. These hurdles slow down adoption, especially in developing economies. Way forward. To strengthen green banking, the following steps are essential: clear green taxonomy and uniform standards, capacity building and staff training, strong ESG disclosure norms, integration of climate risks into credit rating models, incentives for green lending, collaboration between banks, regulators, and government. Technologies such as AI, blockchain, and big data can support sustainable finance. Conclusion. Green banking and sustainability initiatives represent the future of responsible banking. By balancing profitability with environmental and social responsibility, banks can ensure sustainable growth, financial stability, and long-term trust. In a world facing climate uncertainty, green banking is not an option but a necessity for resilient and future-ready financial institutions. Thank you very much for your patience. Request for like, subscribe, and share.